Rahul Sharma is here with us. Rahul, how do you trade the Nifty and Bank Nifty, and what's your reaction on that point I was making? Last 5-6 trading sessions, we are observing that lowest point gets made in the first hour of trade, and dips are intraday recoveries are witnessed on the dips.
Yeah, so it's quite a lackluster, intraday trading move, I would say, in spite of the VIX closing in at a 6-week high yesterday. So clearly, the momentum is slowing down as Nifty has progressed above the 18,200 mark, and we've seen in the last 3-4 trading sessions, at least there is a sectoral shift that is happening. Banking, which was hitherto the sectoral leader, has sort of taken a backseat, but there is an attempt to cross the previous all-time high, which is around the 44,000 odd. Now, my sense is we may, sort of continue like this for a few more trading sessions. The range-bound movement may continue, but the undertone, the texture of the market is still bullish. We are seeing IT sort of, coming out from the blues and helping the market stay up. Pharma has been doing well. There is no clear decisive sector which is sort of dragging the market down. So maybe a bit of pause, and then I think we should remain optimistic for a target of 18,600 for the short term in the Nifty. Dips, if any, are advised to be bought into. Now, which are the key levels? One is 18,200 is a good base that we've seen, especially in this weekly expiry. We've seen a significant amount of put writing at 18,200, and I think 18,000 should be a psychological level to watch out for in case there is a dip or a correction that comes in the next few trading sessions. So buy on dip should be the strategy if you are a positional trader. 18,600 is where we are looking at Nifty, and I think broadly looking at the way, especially the broader market index, which is the Nifty 500 index, is positioned. Still, the breadth is not as bad as we've seen in the past. Yes, we've seen a very good rally from after the mid-April correction that we saw from around 17,600 odd. We've seen a good rally in the Nifty. So a bit of cooling off, or correction is very much on the card, which is what is happening. But I think there is a lot of money waiting on the sidelines, and especially given the institutional mix, which is no real institution is heavily short on the market. That goes to show the undertone, which is quite bullish as we speak.
Rahul, your take on the couple of these big movers, heavyweights like L&T as well as Dr. Reddy's. Would you suggest a buying on dips on these names?
Yeah, so when it comes to something like an L&T, it has been quite a darling stock in the capital goods space, and like every time this correction is a good opportunity to re-enter in case those of you have missed. So the robustness of the chart is pretty much there. So just speaking of numbers, the stock has not broken its 100-day exponential moving average since July last year. So it's almost like a good 11 month period where the stock is sustained above this moving average. And I think this time also it should not be any different. So maybe a couple of sessions here and there, around 2,200 is where the 100-day moving average is. I think one should look to buy this dip and simply wait for the stock to turn around. I think there is good risk reward around 2,200 in L&T. As far as Dr. Reddy's is concerned, the stock had a very good run up in the pharma space. In fact, it was one of the top performing stocks in the pharma space. Yes, the correction is very sharp, especially today, the kind of volume-based selling that we are witnessing. So maybe a bit of consolidation, a bit of time spent over here, and then probably we should look for re-entry point. But as far as L&T is concerned, the quality of the chart is much, much better as compared to a Dr. Reddy's, or pharma in general, I would say.
There's appetite coming in for pharma stocks. DRL has been one of the best performing ones. It will be interesting whether this dip is bought as well. But L&T for sure. In fact, just half an hour back, we spoke to the management. We'll get some commentary also going for you, which Mr. Shankaraman did tell that margin pressures are transitory. And in the second half of the year, they expect this margin pressure, which was visible in this quarter, starting to reverse. But very quickly, I would also want to know, how are you trading the market? What are your specific trading ideas right now, Rahul?
Yeah, so I think, on the banking space, we are liking Axis Bank in particular. On the private banking space, the stock has, in spite of the disappointment in the results, the stock has absorbed the selling pressure well. 860 has been held on well, and this is this week we are actually sustaining and possibly giving a close at the highest level since the 10th of Feb. So my sense is there is more upside coming in the banking pack. especially Axis Bank. I think 930, 950 is where we look at the stock on the upside. Another name which looks good on the long side from the auto space is M&M. M&M enjoyed its time, saw correction. I think now the tables have started turning, and slowly, gradually, I think this stock should also head higher. Around 1335 is where we see the stock in the next 10 12 trading sessions for the short term, and can look to be a trader, long trader in M&M as well. So both Axis Bank and M&M are top pick. I think these stocks, they have been beaten down when their respective sectors were doing well. I think now is the time for them to play catch up.
Question. Curious to know, is there a nice rebound which is happening in Adani Group stocks? Look at that. Adani Enterprises, Ports, Adani Power, all of them are firm in trade. Is there any stock which you would like to bet on a risk reward basis, purely on the trading side?
Yeah, so speaking of the Adani Group, it is a bit tricky to trade in such stocks. But one thing is clearly happened is the base open interest, the total open interest that this group was holding is significantly lower as compared to what it was during its previous peak. So we don't expect any major sharp moves happening in this time around. I think from a risk reward perspective, cement is one space that we like. Ambuja Cement slowly, gradually has made a base around the 370, 380 mark, and now seems to be ready to shift gear. So I think from this Adani pack, I think Ambuja is one stock which looks good. Maybe you can have a stop loss placed in at around 395, and around 440 is where we expect the stock to go in the short to medium term.
Okay, Rahul, thank you so much for joining us. Let's talk about